Okay. Okay, so we are looking at 11B.2 today, and this is question 1. So for question 1, they started off giving you the cost of your security system. This is on the very first day. So that's the cost price, and this is the installation cost. So what is the total cost, right? You actually have to add them together because the purchase cost of a security system should be capital expenditure. Installation cost is also capital expenditure. So just a quick recap, capital expenditure basically means that we have to record these costs as our non-current assets. Okay. The security system is estimated to last for 5 years. So 5 years, this is actually your useful life. Okay, it is estimated to be at the end of the useful life, it is estimated to be sold for 2,000. This 2,000 is your scrap value. All right, so basically this means that at the end of the day, you can get this back. Okay, so you don't depreciate this. The business depreciates its equipment using the straight line method. Okay. Part A, they ask you for journal entries to record purchase of equipment. So this security system is under equipment. Okay. They also asked you for journal entries for depreciation and accumulated depreciation. This one is one set itself. Okay. Depreciation is over 3 years, 30th April 2009, 2010, and 2011. Okay, just take note the first day of the financial year is 1st May 2008. Okay, it ends on 30th April 2009. Okay, so there's only 3 years that we're talking about here. So part A, yeah, you can take out your foolscap paper now. You just do it together. So worksheet 11B.2, question 1A, journal. Okay, so first step is to recognize record the purchase of your equipment. So it's on the purchase date itself, which is 2008, May 1st. So we will debit our equipment because equipment went up. Okay, why we debit this? Because this asset going up. It went up by the entire amount, which is $10,400. 10,000 is purchased on credit. So you will have to credit two different accounts because one is on credit. So on credit means it's trade payable. Trade payable, write the business name, Safe Trading. All right, this is liability going up. So liability goes up by 10,000. You owe him more. Okay, so liability goes up. Then you still are the $400 wise, it's paid by check. So check will be your cash at bank. Okay, so this is asset going down. All right, so when you buy non-current assets, you can buy on credit, pay by check, or pay by cash. Okay, so 3 different ways to buy. Okay, but for your depreciation wise, it's done at the end of the financial year. So May 1st, 2008, it ends on 2009, April 30th. All right, so what to debit and credit? Basically, you will debit your depreciation. All right, all right, the EP you can spell out in full. All right, depreciation of equipment. And credit your accumulated depreciation of equipment. Okay, I just write EQ for equipment. You spell out in full, okay? I have no space. Okay, so every year you use it for 5 years, scrap value is 2000. So we will apply the formula for straight line method. There are 2 formulas. If it's for the year, then you divide by the years, okay? So it's cost, which is 10,400 minus scrap value 2000 divide by 5 years. Okay, cost minus scrap value divide by number of years, which is 5 years. So every year is $1,680. Every year, your accumulated depreciation will go up by $1,680. So this is basically recognizing more expense. At the same time, recognizing more of your contra assets. Okay. So you will do the same for 2010, April 30th, and 2011. Can I give you 2 minutes to do it? So there is no need to show the working again because every year is just the same value. All right. Do take note for straight line method, every year should be the same, except maybe first year you buy it in the middle of the year, all right, then it will be a smaller value because you need to count the number of months, okay, and do your prorate. Prorate means you have to see your usage, okay, because depreciation at the end of the day is all about your usage. Okay, so do it 3 times. Okay. Okay. After that, just do your part B and C. But part B and C, they only ask us to do it for the 3rd year. All right, so this is actually similar to what we have done for worksheet 11B.1. Okay, whereby when we do the extracts only for the last year. But read the question carefully. Sometimes they ask for 2 years, then you have to do 2 years. Okay, so statement of financial performance. Okay, I'm just going to move down. You have to write your business names on top. So write steady tables. Okay, then copy out the statement of okay, statement of financial performance. All right, all the way until 30th April 2011. But bring the word extract to the back. Okay, so because you are doing an extract, you're not doing the entire thing. The title copy from the question. Okay. The expense that we are talking about, of course, is your depreciation expense. Okay, so when you read the title of the statement is for the year ended 30th April 2011. Okay, that means every year the usage, all right, the depreciation is 1680. Okay, that's why the expense for each year is 1680. So this number actually appears in every year's statement of performance. Okay, but for your statement of position is as at that point of time. Okay, so same thing, write the business name. All right, and then do your statement of position. All right, copy everything and then write the word extract. Okay, the subheader here, of course, is NCA. The item that we're looking at is equipment. Okay, then draw the 3 column at the back. Okay. Now there are 3 columns for the header here. Cost, accumulated depreciation, all right, as well as your net book value. All right. There's actually an invisible minus sign and an equal sign here. All right. Invisible means when you don't have to write this, okay? Because everybody will know, okay? All the accountants will know, all right? How do you get your net book value, right? It's basically your cost price minus accumulated. So cost price in this case is the amount, okay, of the total capital expenditure, which is $10,400. Okay. Accumulated depreciation, because we are looking at the third year, over the years, right, you have depreciated 3 times. All right. So your accumulated depreciation, the balance brought down, has gone up, all right, by 3 times. Okay. So your accumulated will be 1680 times 3, which gives you 5040. Okay. Now, when you write 5040 here, you can just write your working, right? Okay, below the equipment sign. Okay, so you can tell them that you're calculating accumulated depreciation equals to 1680 times 3. Yeah, so this one is a good to have. Okay, so the balance brought down for your accumulated depreciation is 5040. That means over the years, your accumulated usage. Okay, so your net book value is basically 5360. This is the value that how you value your equipment as at that point of time. Okay, in the books. It is not the selling price, it's not the market price. Okay, it's basically the value that you value it in your books. Okay, so that's all for question 1.